Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it is a new week and we've got some interesting things going on. So we might actually have, hold on, let's adjust this up a little bit. It's a lighter week economically in terms of economic news. But we got stuff going on in Japan, and the treasuries are in an interesting place. So we may get some interesting action this week. Let's go and look at the charts and see where we're at. So there's a lot of stuff in Japan. There was some, kind of concerns at the beginning of the weekend, and then Japan came and said some things that cooled things down. There's concerns about insurance companies in Japan and unrealized losses from holding their bonds. So, but we are a little bit higher than we were on Friday, and so far the flows look to be long, although we are just getting started, so it's a little early to be calling that. Here's the S&P 500, a little bit of a rally overnight. By the way, I think that this is in part due to, like, Donald Trump was going to do tariffs, right? 50% tariffs. But then he said, actually, no, I'm going to delay it. And it sounds like that the European Union is putting extra effort into trying to work out some sort of a deal or something like that. So I think that is kind of what is driving the rally here. Oil is not doing much of anything still. It's just kind of trucking along. So maybe 61 is just the equilibrium price based on supply and demand right now. Gold and silver appear to be a little bit weak this morning. So I'm wondering if some of the risk premium that was coming from, people concerned about what's going on in Japan and other places and moving their money over into gold. Perhaps they are coming out of gold, even though we are seeing it in CN, but I wouldn't say super strong. So that's something to watch, a flow that we might see. Here's copper. So copper had a huge jump on the 25th, but it has since retraced most of that. Still, I'd say a significant break. Somebody definitely bought there. And here you can see the Japanese yen weakening a little bit here on these comments and headlines from over the weekend. So I don't completely understand all of the things that I'm reading. It was all super brief, and I'm not catching a lot of media talking about it, but that's where we're at. And here's Bitcoin. Bitcoin, not doing too much. It's still around the 110,000 rather. So that's where we're at today. Again, it seems to me like that the flows are maybe a little bit long, but oh, now how come I'm getting, okay, so here I got to do the rollovers. Oh, that's weird. That's weird that ZB wants to roll over, but not the others. Let's see here. It is. Tomorrow is 3 days before the contract month. So we should check the liquidity to see if we want to move over from June to September, right? Oh, that's 24. ZN, U. That's what it was. Well, it looks like that well, for starters, the back month is a little bit higher by a few ticks, but it looks like the volume is maybe a little bit better in June. So the biggest that we see over here, or sorry, not in June, in September. The biggest that we see in June is that big old number at 111. But over here in September, there's a couple of 3000s. So my ZN, Ninja Trader's not going to want to roll over yet, right? But I think we could absolutely justify rolling over. By the way, we do get a couple of headlines that are economic numbers this morning. Let's see here. CB consumer confidence, the big one. Oh man, I was just thinking it's a little warm in here today, and then the AC turned on. Okay, and we had a 2-month bill auction. That I think is going to be pretty important because, you know, people are concerned about what happened last week. And, you know, we're after the holiday. It's 2-year auction. I think that there will be strong demand for the auction. But, you know what? I'm definitely going to roll. We're going to roll. Yeah, that's weird. I wonder how long it's been like that for. Okay. By the way, good morning, Ray, Octavius, Amir. So my thing is, I got this. Well, Oh, yeah, I know. Okay. Come over here to the editor. Strategies. Advanced market order imbalance. Oh, I added to this advanced one, right? Oh, there it is. I have it. I just have it commented out. Drink. Good morning. Easy and normal day. I think that we should, you know, even though it's a Monday and you tend to get a little bit difficult action on Mondays, I think that we're probably going to have a okay amount of opportunity today. And again, it does look long to me. I think that the flows here and everything are the powers that be have decided that they need to reduce interest rates a little bit, that it's getting a little bit too heated in here, and they're cooling the temperature off, and that you're likely to see overall buying. I don't think that it's going to be super strong, but, you know, like what we've had here so far, it's a little bit on the upside. And, you know, like what would be, well, 17.5 would be your really, really big upside target. Although I don't know what it would be in the front month. It might be, I don't know. I don't see any big orders there either, so. I would expect to see a big order there at that high from the 23rd. So, I don't know. Oh yeah. Market depth. Okay, there we go. Got that up. RTY, the biggest winner, and silver, the biggest loser this morning. So maybe the money is just coming out of gold and into equities. I was seeing a little jump there in S&P 500. Nippon Steel considers offering golden share for U.S. steel deal. Trump could move ahead with new sanctions on Russia in the coming days as he vents frustration at Putin for his aerial assault on Ukraine over the weekend, sources familiar with the matter cited by CNN. My nose is particularly itchy this morning. Okay, so what else? Oh, yes. Turn the robot on. And that should turn on our blinds so we can see where the news is. Okay, 15 minutes ago, Joseph Wang. This is Fed Guy 12, really good guy to follow in our space. Japan sparking a bond rally on news. It's tweaking the composition of their issuance so there will be fewer, longer dated issuance. This is similar to what Yellen did in 2023 to help stabilize longer dated yields. Which, by the way, are we going to be getting flattening because of that? No. Say overall they are still steepening, although no, we are getting flattening. I was looking at the wrong line. Yes, a little bit of flattening. Rasmussen report says for the first time in their polling history, a majority says that the country is on the right track. So I find this incredibly fascinating. I thought that once people started to see the well, I don't know how to describe it. Listen, when you're trying to switch the direction of the country, particularly economically, you're going to crack a few eggs, right? And I was concerned that when the public started to see that they would kind of start to move away from that path. And it seems that does not seem to be the case. It seems like instead what happened was we got all of this, oh no, this is going to be so bad, finger waving going into it. And then he did it, and it was at first it was like super scary, and the market was all freaking out and everything. But now things have stabilized, and people are going like, oh, this is not so bad. And hey, maybe he actually does bring business back to the United States. And like, it seems like that Donald Trump's support is actually solidifying, contrary to what Democrats thought was going to happen. And you're seeing that in some polling, and I find that incredibly fascinating. Because I kind of thought that if that he would take a hit the first part of his presidency and then maybe recover by midterms or something like that. Like that was like the best case scenario for Republicans, and he's done much better than I anticipated. I guess I want to go and check out Reddit and see. Oh, there we finally got the ASL finals. I wanted to watch the Africa StarCraft League finals. I was hoping it was going to be yesterday that they would post it, but they didn't. They didn't have it ready in time, so I can watch it tonight, I guess. Don't spoil it for me. I'm sure Sulky wins, but don't spoil it. Yes, so coming over here to Reddit and seeing if I'm getting much activity this morning from the traders. Reddit, very, very much on top of this. Oh no, everything is falling apart. Wife changing money on team. Okay, so there's this subreddit I've found called Doomer Circle Jerk, where people basically just post threads from other parts of Reddit and so forth of people claiming that the economy is going to fall apart and that the world is coming to an end and yada, yada, yada. And I think it is so funny. Like Reddit is very much all tilted one way, but there are subreddits that are like, I'm so fed up with this. So another thing is there's a new AI model that makes very, very realistic videos, and people are just going crazy with it. Here's this person on CS Career Questions says AI is going to burst less suddenly and spectacularly, yet more impactfully than the .com bubble. Okay, so this reminds me. I'm not. This isn't directly related to AI, okay, but it was something that I was seeing the other day. So this guy was saying that during the COVID years, when interest rates were super, super low, a lot of people like racked up debt. They took advantage of those low rates and took on a lot of debt. And corporations absolutely did that. Corporations added a lot of debt to their balance sheet. The problem is that these companies did not really take that money and invest it back into the company, invest it into increasing the operations and all of that sort of stuff. Building a better workforce, growing the company. Instead, they spent it on stock buybacks. Many companies did take out debt and then paid for stock buybacks with that debt. So what can happen is those debts become due, And if their company hasn't been growing, then you're going to have to do the opposite. You're going to have to sell stock in order to raise money to pay for your debt. And so then what is a boon to the market, the stock buybacks, becomes a big drag on the market. And so I think about the AI thing. I think a lot of what has happened is tech companies in particular have said, we're going to slim down excessively, especially on our workforce. Like Microsoft, for instance, they've been super, super brutal with their layoffs. And they're doing all of this, I think, on the premise that it won't affect their growth because they will continue to grow strongly because of artificial intelligence. And the problem that I'm seeing is that while artificial intelligence is a very useful tool for me, it's basically just like a better, more productive version of Stack Overflow. And not even that. Like, I don't know. The thing is, it's on Stack Overflow. Like, all of the information was usually there, and all of the discussion about like the nuance and whether this was a good idea in the first place, or, you know, maybe you made a mistake somewhere further back. With AI, like, it gives me the code, which usually doesn't work, by the way, but it gets me close enough. And then I know which things to go and search for and find in the documentation to understand what I'm doing and making sure that we're making the right decisions. So I'll say the AI usually doesn't. I almost always have an idea of the architecture that I want. I don't let the AI do those kinds of decisions. So just let it write code. And I don't think that overall I'm not seeing these organizations become hyper productive because of the introduction of AI. I think that there's less hangups in writing code, but that those don't tend to be the big bottlenecks anyways. So again, like, individuals seem to be more productive, but teams are not. So this idea that like AI could burst less suddenly and spectacularly, okay, maybe. I don't know if it matters, but that does seem to be the case, that like people are clinging to it really, really hard. And so if it is a bubble, it's going to take a lot to get the AI bubble to burst. I think we already had one section of it burst at the beginning of this year when they found out that, like, you know, OpenAI can't really make too much money off of it. They switched back to being nonprofit. So yeah, I think that that's interesting. And another thing I think is really weird that I don't see people discuss very often is, you know, that it's been like 5 years now, right? like AI has been around for a long time now. After music, I could spend my whole life working with AI. Oh boy. I definitely could see in the future there being jobs where basically the whole thing that you're doing is training an AI. Never ending pursuit to improve the AI. Like, I think that AI trading assistant could be really powerful. I think that what I would need to make that be really effective is more complicated than I have the resources for. But if I like worked for a big bank, you know, they could be putting the resources into that and maybe could be doing that really effectively, you know? And then the traders would be constantly talking to the AI and through their interactions trying to train the AI to interpret the market correctly. Oh, am I back? Okay, so it's been 3 years, 2.5 years. It's been 2.5 years. But like the thing is how come if it's been 2.5 years, where are the AI productivity improvements? Because it really seems to me that a lot of these companies are expecting insane increases in productivity. And I don't see that. Like, it would maybe be like, okay, maybe you don't need as many software developers, but the ones that are left should be insanely productive and paid really, really well. But I'm not seeing that. I'm just seeing a lot of people getting laid off and other people having to take on more work. Granted, that's not happening at the company that I'm currently working for. The company that I'm currently working for seems to be expanding pretty aggressively because they're basically taking something that was on-prem and moving it into the cloud. That's a pretty big effort, and there could be a lot of money in that. But what I see people saying, especially at these big tech companies, is like, sounds like a nightmare. All the talk of utopia, dystopia from the artificial general intelligence, the ethics / alignment of AGI, etc., are based solely on whichever sci-fi those people consumed as a kid. And sure what I see. Okay, so now I've got to remember I got 3 things to do. You know what? Actually, maybe I should just do one of those right now. Because like, we got some good action there at the beginning, but it's kind of held off. We're in a period where it can be a little testy because the ES starts to become the ringleader. And since it just hasn't moved, I don't think that we're going to get a trade. Oh, you know what? I did enable the AI, and it didn't work. It gave me... object not set to an instance of an object. Okay, so we can leave that for later. I'm okay that it's not trading right now. But I do need to come in and write a little bit here. I needed to collect some information about my computer here. Yeah, hold on. I'm going to go check something. Hmm. Well, we did move down a tick. I don't remember. What does this thing use? You know, I'm just gonna look. I'm seeing a little bit of a move in Bitcoin. Mhm. So we are getting some clicks as the S&P 500 gets going here. Okay, they came down there a little bit as I'm hearing the news squawk talk here about comments from Fed Sparking. People are being patient on investment decisions. Now, I heard the thing I heard overnight from the Federal Reserve was, who was it? Kashkari saying, well, there's an argument about whether we should wait or not, and I'm kind of siding with the ones that we say that we should wait. This kind of doesn't make sense to me, to be honest. So like, if we are entering into a period of economic and if we're entering into a period of uncertainty on growth and uncertainty on inflation, I feel that would support preemptive action, although it becomes risky, right? Because if you wait, then and there is a problem, then essentially whatever you do, you will be late, and you run the risk of creating a situation similar to what happened after 2020, although perhaps in the other direction, if you don't get inflation, right? Or if there's a recession or something like that, right? On the other hand, if you come in and you act, you're gonna be hitting it at the right time. But the issue there is if you get the direction wrong, right? Like you think that there's going to be a recession and there's not, and then that ends up creating inflation, or vice versa. You think that that's going to create inflation, so you raise rates, and then there's not, and it creates a recession, right? So, but then if you wait, I kind of feel like that you're guaranteed to have a problem. Right? Is that, how do we draw that out? Like, okay, so this one is neutral. This one's inflation. This one is growth. So this is where things are, everything is fine. This is where inflation goes out of control. That's the bad thing. This is where growth gets hurt. I suppose that you could get both of these at the same time. But then here is we act, and here is we wait. Right? And I'm saying that if we wait and there is inflation or there is a percentage, then it's bad. Both of these situations. Okay, if we act and it's neutral, that's bad. But then, oh, we have to change it. We have to change it. This is wait. This is raise. This is cut. This is economy is neutral. Inflation is hurt. Growth is hurt. So if we wait and everything's fine, then this is a problem. This is good, but this is a problem, and this is a problem. If we raise interest rates and everything is neutral, that's a problem. If we raise interest rates and there's an inflation, then that's good. That's what we want. If we raise interest rates and growth is harmed, then that's really, really bad. Okay? If we cut and it's neutral, that's fine because that's what we were supposed to do anyways. If we cut and there's inflation, that's kind of super bad. But if we cut and there is a recession, then that's good. Right? So, there's one of these scenarios where where we cut. Two of the scenarios are good and one of them is really bad. Whereas all of the other ones, there's only one good thing. So it seems to me that because if there is a problem, right, the wait is only good if the economy ends up being neutral. And I don't think anybody thinks that's going to happen. I think this scenario is like, everybody thinks this scenario is a low probability, right? Good morning, A. Paul. Democrats seem to think that this inflation scenario is really, really likely, right? So if there's a de-inflation ratio, then we should be raising right now, right? But nobody wants to raise rates right now. So does that think nobody thinks the inflation is actually going to happen? I know. I don't think that the serious people think that inflation is going to raise enough that it's super bad. So maybe this scenario right here is not a double X. It's just a little X because we might get some inflation, but only be 3%, right? If growth is hurt, though, if growth is hurt and we wait, then we have a recession. If growth is hurt and we raise, then we really, really have a recession. If growth is hurt and we're cutting now, then we avoid a recession. I think the game theory favors the cut, although it's not entirely all one-sided, is it? That's my thinking on this matter. But you know what? Like what they're doing right now is they're saying we're going to wait, but the market is pricing in a cut. So I think that we are kind of in default on this one, right? So I don't like the rhetoric, but maybe overall they're doing the right thing. The Fed will do what hurts Trump the most? Maybe. I mean, if they were doing what hurts Trump the most, then they would be raising rates right now. They'd be saying, we're really concerned about inflation and we want to raise interest rates. And blah, 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 blah. All right. Sorry it was so quiet there. I just had a bunch of things to do. Well, not a bunch of things, but two main things to do today. We're going to have to figure out, I think that probably adding the chart indicator on here, not a problem. Maybe the news thing is not instantiated. That might be the problem there, but we can debug that first thing tomorrow. Got a few. Okay. Well, I tell you what, this was once again a very quiet session. We are still getting stuff that kind of suggests to me that the activity that we've been getting in the treasury market is largely to do with Japan. and who knows, maybe there was somebody else selling, caused that big drop. But and if that is the case, I think that Japan there was a change that will probably cool things down at least for a little while. So we'll see, but it didn't result in super strong buying today, at least during our session. So we'll see how the S&P 500 goes today, huh? It's been pretty wishy-washy today. So we'll see you guys tomorrow, and who knows, maybe it'll just be like this until next week when we get the next slate of economic reports. I will see you guys tomorrow. In the meantime, I love how Apol always says GG when he realizes that I'm shutting things down. I love it. All right, guys, have a good day. See you tomorrow. Stay excellent, team.